Hey everybody, welcome to another Secret Trader User Group Weekly Roundup. This is for the week ending November 7th, 2014. What I've got on the screen here is the recent price action for the E-mini S&P 500 futures. You can see we've had a very strong move up here. I mean, just this is a rare move because traditionally you can see V patterns like this, but when you get a V pattern that is this sharp, this strong, it normally doesn't move this fast. When we have a move from this point down to this point down there, that was about a 10% drop. So when you get that, normally you'll have a bounce off and then a down and then a retest and then another move up. This has just been very strong right here. In fact, we moved up faster at a larger percentage up than we did this move down, which gives us this V, gives us a very rare move. On Friday, we made an intraday high of 2033.50, and now you can see we've kind of just closed with the candle gives us a little bit of a doji on the top side. So we're looking at I think an opportunity of a little bit of a pullback near term, where we get a little bit of this consolidation resting period. You can see we're on a three-leg. Traditionally in a three-leg, you're going to have a little bit of a four-leg like this, and then a final thrust up giving us a five-leg. After a five-leg, you generally have an ABC pattern, something like something like that. And then at the end of the C leg, then we determine, do we go higher or do we go lower? And that's going to give us, this move right here is going to give us a lot of chop, I believe, as we go through the end of the year and wrap the year up. This blue line right here, 1837.75, is where the E-minis, the future symbol ES, where it opened for 2014. So you can see we actually went below 2014. And then we just bounced hard back up dramatically, and we've had this big move. There is absolutely no bearish divergence in the indicators. MACD is just one of them, and this is kind of where we're sitting. Now, I want you to note that we took out the prior highs of 2011, made just back in September, and now we're sitting right in this area right here. So just make note of this, because the other key index I want to show you here is the Russell. And the Russell does not have as much strength in it as we are seeing in the E-minis here. If we take a look at the Russell, you're going to see right here, again, a similar move. We broke through a key level. We came right down to 1038.60, which was very near another level, a key level for us. And again, same type of price action. We had this V pattern here, and in this move right here like that. Now the rut off of the highs was about 14%, but you can see here we could not take out a prior pivot high, and then of course the 2014 high up there of 2013. We're nowhere near that, although we did just eke out a price level where we're just above break even for the entire year for the Russell. Small cap has not been participating in this move. Now, we do not have bearish divergence, as you can see here on a primary indicator here with the MACD, but as I told our members, I wouldn't be surprised to see a little bit of a pullback below the watermark here for 2014, a little bit of consolidation, and possibly a move higher, giving us a final five leg before we decide what we want to do. You can see right there the 50 and the 200 cross to the downside. The 50 is relatively flat to moving up just a little bit. Same thing with the 200 EMA. So we're not going to get a cross in that anytime soon. I do believe we're going to get a little bit of a consolidation in this period here for the Russell. So that's a little bit about where we're sitting right now on these primary indexes. Now, if we come back and let's just go look at a couple of other key markets right here. The one thing that I wanted to show you here, we're very similar to the way we were a year or so ago when risk-off assets were doing very well. We got the utilities hitting all-time highs. Take a look at the bond market. You can see this trend level right here with the bonds moving up. Now this trend is followed by that is shaped by this blue shaded zone here. It gives us a very interesting pattern here for 2014. You can see the entire year very strong for bonds. Everybody was betting that interest rates would rise and bonds would fall in 2014. That has not happened. We had this humongous day right there back second, third week in October where we had almost $1 trillion trading hands in U.S. securities in one day. And now we pull back to our support level right here, and now we're back up. And Friday we finished, as you can see, that candle there, very strong candle. We finished right at a key resistance level now at 141.30. So now if we zoom in on this, I'm going to give you guys just an idea of what could happen near term on the bond market, and that would coincide with the down move. Or a potential short-term, near-term down move on the indices, because we're starting to see a little bit more of a normalized correlation here with bonds and equities. So now I blew this up again. We're looking at the bond futures, and you can see on this chart right here, as we zoomed in, that strong candle right there that we made on Friday. And you can see that we're moving up. I think we could come up to this level up here. If we do move up and test that, I don't think we're going to move much higher than that. I really don't. I just think that what we're going to see here is, well, let's get back so we can get in and we can take a look at it. Let's come back into our chart. So what we can see here is this move up right here, and then I think we're going to get a move back down in this area like this. So this move up here would coincide with a down move in the equity market, and then as bonds roll back down, probably testing this upsloping trend line right there, possibly finishing off the year. You can see in the MACD we're getting across right on the zero line, so that bodes near-term bullish for bonds, which would be a little bit of a near-term bearish for the equity. So this is kind of lining up the way I see this right now. So as I'm telling our members, we're still long. I mean, we're playing this long, but from my perspective, I'm only in long. I've got cash on the sidelines. I'm waiting to deploy to see how we can make this really move nicely here to the upside. But right now, I'm looking for a near-term pullback. Now, speaking of stimulus, because we've had Japan come in with a lot of stimulus, we've had China talking about it, and we've had Europe contemplating it, but they've been contemplating for a while. If we look at the pound, and let's start with the UK first. If you look at the pound, you can see how it has just been dramatically punished leading up to and after the Scottish vote where they voted to stay in. You can see this downsloping trend line right here. You can see we're at a three-leg down, so I think there's more downside action, although near term you can see this bullish divergence, so we could come up and test this downsloping trend line. We may even punch through and test the 50 EMA here, the red line that's kind of paralleling the downsloping trend line. But I do believe near term or longer term, we still got some more downside action. It was just only about a quarter ago that the Brits in the UK were forecasting to move their interest rates up before the U.S., but they've kind of changed that now with some of the problems they're having over there. The biggest export partner or import-export partner for the Brits is the Euro, the European Union, and they're not doing very good. And speaking of the Euro, if we take a look at the Euro, you can see how this thing has just, we're down in this support zone right here with the Euro. And you can see, and let's just back out to weekly just so that you guys can see this action a little bit better. You can see now, if we look at it on the weekly, you can see this downsloping trend line. We just cannot punch through it, and now we're in this support zone here. I think it can go lower. I think near term 116.70. The only thing that's really going to push the euro much lower than this, just enough energy to blow it through this blue support zone down below 116.70, as you see in the chart, is more stimulus in Europe. If they do that, you'll see the euro continue to move down. Otherwise, I think that we're going to kind of chop around in this area. It's going to take some time. We're going to need to see more growth across Europe, unemployment rate come down, wage productivity to go up to see the euro start to be able to get any legs to stand on for any type of possible long trade. Right now, we're still short the euro. We traded this to the short side and had a lot of fun with it. Now, another one that's very interesting to the short side is the yen. As you can see on the yen right here, it is just getting decimated. Now, we've traded the yen to the downside up towards the peak up here when Shinzo Abe came into power. We started getting into the yen before he was elected. The votes called for him to get elected. He clearly was winning everything, and sure enough, he got elected, and they announced big stimulus, and that just totally decimated the yen, which is really great, the Nikkei. But you can see this huge move down. And then we got into a tight zone for about 8 months this year. You can see this tight blue zone right here. And let's just zoom into the daily. Now, I had our members, I talk about this every week. I didn't know which way it was going to break. I thought that the potential break would be more to the downside. And I told our members this every week. And I said, every time it breaks to the downside, pick up, go short, and you may get stopped out, but the risk warrant the trade. And we finally got that big, huge break, and then we broke the key pivot over here, as you can see where my cursor is, and then we just went to the downside. We made this feeble four-leg attempt right here. You can see right here on this feeble attempt, and then the Bank of Japan came out last week or the week before and announced, I think it was early last week, they announced more stimulus. They doubled down on their stimulus policy, and it just cratered. I do believe that we're near the bottom for the yen. I don't know. I don't believe the Japanese are going to do more stimulus. They could. But let's see how this thing works itself out, because they indicated that they could. There is no bullish divergence, so I think the near term is neutral to bearish in the yen. So this, and then if we look at a couple of other key things here, if we look at gold, gold as an inflation hedge is not the trade right now. You can see gold, I think it can move down to 1,000. You can see gold had a good day on Friday. We're in this key support zone there. If we just step it out just so that you guys can see gold here on the weekly basis, we've got bullish divergence here. You can see down below where we're sitting with gold right now. I do believe that we're probably going to see some activity in gold in 2015. You can see this 3-leg, 4-leg, and then a 5-leg starting to form here. I think it could possibly come down to this area here, and then gather support, give us an ABC pattern, something like that. And then we say, do we go higher or do we go lower? I would favor a higher move in 2015. Once we get whiffs of inflation coming in, I think you're going to see gold come up and challenge that key pivot right there. But we're not near that yet. We've got a lot of time to go. So I've been sitting on the sidelines. I chose not to trade gold in this near term. It's very sensitive to movement here, but I do believe, and if we come back into the daily chart, you'll see here, like I said, we had a strong finish to gold on Friday, as we did bonds. There is no bullish divergence near term, so it's just going to be a lot of chop here is what I think, at least near term for gold. And energy, oil is also getting decimated. If we look at the oil, and let's just zoom out to a weekly to add a little bit of perspective on this thing. If we look at the weekly, you can see here the symmetrical triangle that broke to the downside was, with the symmetrical triangle like this, its odds favor either break up or down. With the global economy just going very bad in the U.S., pumping more oil or drilling for more oil, the odds favor to break to the downside. We came right down and hit a key level here at 77.28, almost perfectly timed here. There is no bullish divergence, so I think oil can go lower. I think near term we may have a little bit of a bounce. If we look at it near term, Republicans took over, so that'll in the U.S., and Republicans are pro-energy, pro-drilling, and really, and you would think more drilling would mean oil would go lower. Longer term, yes. I think near term, if they start to approve the Keystone Pipeline here in the U.S. and they also remove some of the regulations that the oil companies are faced with right now, and the business environment gets a little bit better, I think you're going to see a little bit of a bounce. But that bounce is just an interim bounce. Don't get suckered in. I think oil can go lower. So that's a little bit about where we're sitting with some of the major indices right now. And where we're sitting with both oil and gold. All right, everybody, it's been a very short update, but I wanted to give you an idea of just kind of where we're sitting. Near term, as I said before, I would not be surprised to see a little bit of a pullback here, but just understand this pullback is not a change in trend. I think it would be just profit taking, and we can pull all the way back to 1964.58, which is where the 50 EMA is sitting, or down to 2011 before we start to move higher. So that's kind of what I'm anticipating here near term. All right, everybody, I hope you have a great weekend. As a reminder, I'm going to start our monthly sessions. They'll be free for everybody. I highly encourage you to attend them. They happen on the Saturday after the third Friday of every month, or our normal option expiry period. Now, we've been doing these every month since 2008, but they've been on-site meetings, and I've had a lot of members. A lot of our members are global. They wanted to participate, so I said, sure, why not? Let's bring them in. So at least for the short term, I'm going to open it up free for everybody, so I hope you enjoy those sessions as well. Meanwhile, for our members, we've got our session this evening, 8 p.m. New York City time. All right, everybody, have a really great remainder of your weekend, and I will see our members tonight at 8 p.m. New York City time. Have a good one, everybody. Bye now.